Well, you have to remember the most hated man on earth is always the chair of the Fed, regardless of who they are, man or woman. Everybody hates the Fed. Everybody second guesses the Fed. Everybody says they're doing the wrong thing all of the time. You can't make anybody happy when you're the Fed chair. And that's exactly what's happening here. He's trying to, in this case, in Powell's case, engineer a soft landing, which is near impossible. No one's ever seen that happen. Every time you have a rally like this, we've had an extended rally, multiple days now to the upside. It's because the belief in the market is that the Fed is finally going to slow after this next 75 basis points and kind of wait and see what happens. And we got a little signal from that up in the Canadian market where they decided not to increase the sort of broadcast amount. They went 50 basis points instead of 75, showing an idea of a moderation, if you want to call it that. Now, normally we do not take signals from other countries, but Canada, being the giant trading partner it is, just north of the border, it's the first time in decades I've ever seen anybody wake up and look at what the Bank of Canada was doing. And that's what happened this week. And it actually forwarded this theory, this philosophy that maybe the Fed is going to pause. And so for the first time in a long time, people are thinking, wow, maybe he can pull this off. And we would know sometime of Q2 next year that he could actually bring in a soft landing, slow down inflation. After all he needs, and the Fed in aggregate needs, the board itself needs, is some indication that the rate of increase of inflation is slowing. That's the key right now. And so we don't have that quite yet. There's a narrative in the market, and I want people to understand this and how CPI data is gathered. So much, 40% of CPI data is housing, shelter. And shelter is a very slow index. And so it takes up to 18 months to actually have an effect on it. But people in different markets are starting to see rent rates slow or flatten or housing prices flatten. So really what we're probably doing in the CPI number right now is over-reporting inflation. Here's why we shouldn't believe this number. It's just more Fed beating and more Fed hating and more, telling the Fed what to do. And the truth is, they don't give a damn. They don't listen. They have their own mandate. They're going to do what they're going to do. And I say that'll be 75 basis points coming to a theater near you in the next few days. Well, I've come to the conclusion, because I have my own index to look at, which is my 50 plus private companies, that 50% of this inflation is actually because of supply chain that still hasn't been fixed. Deglobalization, I'll give you just a case study. I've used it so many times. Let's say I'm making gym equipment in Fargo, North Dakota, where I am. And prior to the pandemic, we used to buy all of our metal, our barbells, our screws, some of the infrastructure for the benches from Asia, from China, from Vietnam, from other countries where it was 30% cheaper. We can't get those supplies anymore, partly because the ship that has it on it is stuck at LA Port. Yes, it's still a problem. LA Port has not been fixed yet. And so we are forced to go buy that steel made here domestically. Now, whether that's a good thing or bad thing, we can debate that till the cows come home. However, it's 33% more expensive. So we take those barbells and those benches, mark them up 33%, sell them into an ever-increasing demand market. Our sales have not slowed, but it's 30% more expensive. That, my friends, is inflation. And it's not going to change until I can buy those barbells again in Asia at 30% less, which is no time soon. So the fact is that inflation is self-inflicted by the fact that we are starting to slow down in cooperation with global suppliers. We're fighting with the Chinese, we're cutting off their chips, they're reciprocating. All of that stuff is occurring. And on top of that, people are concerned about domestic supplies of things like semis and oil and gas, because it's the only thing you can count on. You don't want to be begging hand in cap with foreign dictators like Venezuela, or going to see the Saudis and asking them to increase production when they're just not listening. And so at the end of the day, we have this transition occurring, and that's part of the inflation number. The economy itself, though, proven again by numbers today, is doing very, very well. That's because, again, I'm speculating, $6.7 trillion worth of cash was printed in the last 30 months, still sitting in the checking accounts of the consumer, and he and she are spending it. I don't think it's possible to deglobalize, and I'll tell you why. There's certain product categories, once they become commodities, are better manufactured in low-cost countries. And, the idea that you shouldn't manufacture socks in Vietnam because of some protectionism, or the fact that you'd rather pay 5 times more for socks, that makes no sense whatsoever. Yet, if you're building a new chip that actually can fuel AI, artificial intelligence, yeah, I can see I'd rather do that domestically and keep that away from our economic competitors like China, who don't want to play in a level playing field unless they're willing to cooperate. And that's the leverage we have over them. So, different product categories. And I would argue energy, we should remain self-sufficient. That was a mistake the administration made. Prior to the election, the country was completely independent in terms of energy production in oil and gas. And obviously, pipelines were shut down, policy changed. And I think that this current administration realizes they went too fast, too soon, and now we have to pedal back. I'm not trying to play politics, but it'll be reflected in the midterms in just a couple of weeks. And I think what we'll have after that would be very welcome by investors. It would be total gridlock in Washington. That is a wonderful thing. The pause that refreshes, no more bills, no more spending. Let's take a break for a while and then do jump ball in the election, 24 months later. And I think that's a really good outcome, why many people like me are optimistic. Yeah, I would say I'm very excited about going into the new year around crypto, and I'll tell you why. And I have to be transparent. I'm an investor in Circle, which does USDC. I have many positions on, but they're one of them. And also an investor in FTX, both the US and the international company, and a paid spokesperson for FTX. So with those disclosures aside, if you're going to see something remarkable at Davos this year, which happens in mid-January. Each year, that global gathering has a new theme. A few years ago, it was global warming, and then it became deglobalization, then globalization. This year, you're going to see crypto at the top of the list of what is being discussed by global bankers, specifically around payment systems, where we talk about a ACH transfer between banks or SWIFT transfer internationally. These were private sector innovations decades ago that were heavily regulated by global governments. And for the first time now, products like stablecoins could really disrupt that at a significantly faster, more productive, more transparent, more auditable, but above all, far less expensive system for transferring global assets. And so you're going to see companies like Circle headline at that event. And I think it's going to be, Davos will be you're going to see a lot of crypto-based conversation at a global level with global governments as they struggle to find some kind of policy and regulation. And that bill, the Stablecoin Transparency Act, is at the forefront of that. That is a bipartisan US bill that I think could be marked up by the time we get to that place, because it'll be after the midterms on November 8th, which is going to be significant for crypto policy. I think what will happen in the House will help crypto policy. But I think all of this is going to be really fascinating, and why everybody should stay on their toes. Lots of change coming. It's always a good time to start a business. It's actually historically proven now that many businesses started in chaos and declines, and periods like 08, 09 ended up flourishing and becoming huge successes. I mean, desperation is mother's milk of necessity in terms of figuring out what to do next. And great entrepreneurs know how to pivot. I think what we learned about the pandemic and the companies that survived in my portfolio figured out a way to use technology, go direct to consumer right across the board, where margins were significantly better. And the data they're collecting now is significantly better than they used to get from retailers or just selling through Amazon. So I would argue that catastrophic outcome of a global pandemic made a lot of companies a lot stronger. And today we're having one of our best quarters ever and some of our best cash flows ever, because so much of our sales are now at full margin, direct to consumer, with information about their preferences. And so, I think entrepreneurship is never a destination. It's a journey. I encourage everybody that wants to do it. And if you look at graduating cohorts of engineers that I teach, I'm going to be doing this again in Massachusetts next week. I always go to the graduating cohort. A third of the class, men and women from all around the world, will start businesses. So about, 2/3 will be employees and 1/3 will be entrepreneurs. It's not an easy journey. I've always told people to get ready to sacrifice, because that's what's going to take. But ultimately, it does give you personal freedom if you're successful, not about the greed of money, but the ability to pursue the things that mean something to you, the freedom of choosing your own time and what to do with it.